Southeast Asia's emerging economies offer a plethora of opportunities, from searching as a hub for manufacturing to becoming a center for innovative startups and tech firms. In recent years, the region has witnessed remarkable transformation, turning into a hotbed of economic activity. The financial sector is one area where Southeast Asia is emerging as a leader. Singapore, the financial hub of the region, boasts a stable political climate, top-notch infrastructure, and a strong regulatory framework. Meanwhile, Malaysia is fast becoming a fintech powerhouse, second only to Singapore in terms of financial hub status. The country is home to several international banks, excelling in certain categories. Malaysia presents a unique opportunity in the financial sector, with the potential to overtake Singapore as the region's financial hub due to its larger resource pool. As Singapore grapples with an aging population and limited land, Malaysia's growth potential appears promising. However, can Malaysia truly surpass Singapore and establish itself as the next Asian financial hub? To answer this question, it's important to understand what a financial hub is and how it operates. Throughout this video, we will explore these topics and more to gain insight into the potential future of Malaysia's financial sector. A financial hub can be defined as a city or a region that serves as a focal point for financial activities and services. These hubs typically host a high concentration of banks, financial institutions, stock exchanges, and other financial service providers. Financial hubs are characterized by a well-developed infrastructure, strong regulatory frameworks, and a highly skilled workforce. They attract capital, talent, and innovation, making them vital drivers of economic growth and stability. Singapore is a good example, which has cemented its position as one of the world's top financial hubs, alongside other cities such as New York, London, and Hong Kong. The country has leveraged many opportunities to achieve this status, largely due to its strategic location in the heart of Southeast Asia and as a gateway between the East and West. Singapore has also cultivated a business-friendly environment, with a highly skilled workforce and a robust infrastructure that supports ongoing innovation. To become a financial hub, a region must meet specific requirements for its financial industry to prosper. In the case of Malaysia, it will be difficult to imagine the entire country to do so, but it is easier to see it in the lens of Kuala Lumpur. Malaysia's banking sector is a critical component of the country's financial system. It comprises a variety of institutions, including commercial banks, investment banks, and development banks. The first to know is the country's banking sector, which is relatively large. The country has over 25 commercial banks, 16 Islamic banks, and several investment and development banks. The sector holds approximately $480 billion in total assets, with deposits exceeding approximately $360 billion. These assets and deposits are dominated by a few major players, including Maybank, CIMB Group, Public Bank, and RHB Bank. These banks have a significant presence not only in Malaysia but also across the Southeast Asia region and beyond. But despite the presence of 25 commercial banks, the market is still relatively concentrated, with the top 5 banks accounting for more than 70% of total banking assets. These major banks have established a presence in neighboring countries such as Singapore, Indonesia, and Thailand to capitalize on the region's economic growth and increasing financial integration. Kuala Lumpur, on the other hand, serves as the center for Malaysia's financial status. The city itself, quite similar to Singapore, holds robust infrastructure and connectivity. Kuala Lumpur has a well-developed infrastructure and excellent connectivity to other financial sectors, making it an ideal location for banks and financial institutions. The city also attracts a highly skilled workforce, providing banks with access to a talent pool that drives innovation and competitiveness in the sector. And finally, the Malaysian government has also implemented various initiatives aimed at promoting the growth of the financial sector, including the establishment of the Kuala Lumpur International Financial District, or what is known as the Tan Razak Exchange. Additionally, there are also other factors contributing to the overall financial hub status of Malaysia. The country has lavished with a strong insurance sector. It also saw a rapidly growing asset under management industry, with AUMs reaching hundreds of billions of dollars. And finally, the country's capital markets have been amongst the best in Southeast Asia. Bursa Malaysia, the country's stock exchange, has a total valuation of over $400 billion in market capitalization. The financial sector is a significant contributor to Malaysia's economy, accounting for approximately 13.9% of the country's GDP as of 2021. This strong performance is a reflection of past successes and ongoing government support for this sector. Malaysia has distinguished itself as a global leader in Islamic finance, a fast-growing segment of the financial services industry that adheres to Sharia principles. The country's prominence in Islamic finance can be attributed to a combination of factors. Firstly, Malaysia has a strong regulatory framework for Islamic finance, which is overseen by the Bank Negara Malaysia and the Securities Commission Malaysia. The country has established the Malaysia International Islamic Financial Center to promote the growth of Islamic finance. This supportive regulatory environment has been crucial in facilitating the development of the sector. Another contributing factor to Malaysia's success in Islamic finance is its global recognition. Malaysia is known as a global hub for Islamic finance and hosts numerous international events and conferences on the topic. Furthermore, the country is home to the world's first fully fledged Islamic stock exchange, Bursa Malaysia I. This has helped elevate Malaysia's status as a key player in the world of Islamic finance. Lastly, strong local demand for Islamic financial products and services has played a significant role in the growth of this sector. Malaysia's majority Muslim population provides a large domestic market for Sharia-compliant offerings, ensuring strong demand and creating a conducive environment for growth in this sector. Now, to put things into perspective, it is essential to compare the financial sectors of Singapore and Malaysia to understand the gap between these countries and the potential for Malaysia to grow as a financial hub. Singapore is recognized as the most significant financial center in Southeast Asia and ranks 4th globally. According to the Global Financial Centers Index, the country's banking sector is valued at approximately $1.9 trillion in total assets as of 2021. Singapore's financial sector contributes around 13% of its GDP, with more than 200 banks operating in the country. And it has a reputation for being a top destination for wealth management services and fintech innovation. In comparison, Malaysia's banking sector, valued at approximately $480 billion in total assets, is significantly smaller than that of Singapore. The financial sector in Malaysia contributes approximately 13.9% of the country's GDP. While the competition is still stiff, there is arguably a big potential that may take place. In order to assess Malaysia's potential to become a global financial hub, it is important to examine the factors that could contribute to its success in this regard. One crucial aspect that can contribute to Malaysia's rise as a financial hub is its ability to foster innovation and embrace new technologies, particularly in the fintech sector. Singapore has been successful in creating a vibrant fintech ecosystem, attracting numerous startups and global tech firms. For Malaysia to compete effectively, it needs to nurture a similar ecosystem, promoting innovation and collaboration between financial institutions, technology companies, and regulators. Another important factor is Malaysia's ability to maintain a stable political and economic environment. Investors and financial institutions value stability and predictability, which Singapore has been able to provide over the years. Malaysia must demonstrate a commitment to maintaining stability and addressing any potential challenges such as political uncertainty or economic volatility. In addition, Malaysia's strengths and its comparative advantage to Singapore can also be due to its strategic location, relatively low cost of living, and access to a large, young, and skilled workforce could help attract international banks and financial institutions. Lastly, competition from other emerging financial hubs in the region, such as Bangkok and Jakarta, should not be overlooked. These cities have also been making significant strides in developing their financial sectors and attracting investment. Malaysia must continue to innovate and differentiate itself to stay ahead of the competition. In conclusion, Malaysia does have a potential to become a global financial hub. Kuala Lumpur, the country's financial center, has a well-developed infrastructure, excellent connectivity to other financial centers, and attracts a highly skilled workforce. Malaysia has also distinguished itself as a global leader in Islamic finance, providing a conducive environment for growth in this sector. While Singapore remains the largest financial hub in Southeast Asia, and there are likely a huge list of challenges to face, the country can still one day compete head-to-head with Singapore.